Okay, so here's really where things get very interesting. And I spent a long time trying to get my head around this because this is a very unexpected result. Here we're looking at futures volume. Now, my framework for volume, there's been a handful of pieces where we've touched volume, and it's usually been around some kind of major pivot point. I'm pretty sure we had a piece back here. It might have been polarity shift, I think. I think it did a piece called Devil's Advocate from memory. Might be the first one we did there. And my take was we just don't have much volume. Now, the difference is that was volume as we were accelerating back towards the other direction. And the thesis was volume should follow. We should get volume that comes in. And the reason why I like to look at volume at these kind of events is it helps confirm the move. If the market just goes straight up and there's no trade volume, there's not really any coins changing hands, so you're not building robust support. Very, very rarely do you get a low volume move. Generally speaking, it can be a false signal. So we've got to just keep this in mind. This is futures volume. It is down in July. So really surprisingly weak. Now, remember, volume is also a lagging indicator or a coincident. It tends to follow the market. So for example, here we've got low volume and then the market starts moving higher and the market goes with it. And of course, we get maximum volume at the top. So you could kind of think of it, yes, it's a bit contrarian, but I think when we were down here, we were looking at volume as like, it just has no legs. The market started to move and then we got an explosion of volume. So we just don't have the volume now. Paying attention to this over the next week or 2 weeks will really help build some conviction. I would like to see this reverse. If, and this is where I want to try and paint this picture, if the market keeps going and we keep getting this deterioration in volume, not a great sign in my view. To me, feels like we're not building support on the way up. And we've had such a tremendous bull where it's been up, sideways, up, sideways, up, sideways. If we don't get volume and we just don't get people trading this thing, you don't build support and you don't get that stair-stepping pattern. You're more likely to actually get a very sharp and nasty correction. And the next chart I think is going to paint a very clear picture and make this even more obvious. So again, this is futures volume. Here's an example, and it is way, way too early to draw this comparison firmly. I just want to highlight why I'm talking about this now. Here's our volume in 2021, even in the bad time, heaps and heaps of volume. Notice the second all-time high. Volume just kept tapering off. This whole bear market, things just weren't, there just weren't coins changing hands. We just weren't getting that influx. I don't want this to continue to trend lower. And the chart that really has me going like, what is going on is this one, spot volume. What on earth are we doing down here at 5 billion? We had more trade volume in the weeks leading up to FTX blowing up at the end of the bear market when the price was 20K than we do right now. Why are we $120,000 and the volume is like it was down here at 20K? You know, and again, we've got to keep this all in mind. We are still much higher than the previous cycle, but so is the price. Yes, we had a massive explosion of volume. Maybe this is the outlier, very possible, right? This is the election pump and all that kind of stuff. But this trend, I just don't like it. Now we pair this with the fact that the mempool is, well, not the mempool, mempools are relatively empty. We're not getting that many transactions moving around the system. There's a whole lot of things. I'm like, just where is everyone? This is just the one thing I'm just keep looking at going, where is everyone? It doesn't really make sense. You can see how much lower the volume is on the second all-time high. It's really a precursor in saying maybe there just isn't the uplift that we think. So this is a comparison of all sorts of volume metrics, and I really want to highlight it's a good way to just get a bit of a frame of reference and some scale. The yellow zone here, which we've already talked about, is futures volume. And you can see here where we're really, curling off. I want to see this explode. I want to see volume heading higher on all of these metrics. Let's get rid of futures and let's bring up, these are more of our spot-based metrics. Let's stick this back on 0. So we've got a couple of traces here. The first one in orange in the background here, this is our spot volume that we're just looking at. In the blue, we've got our ETF volume. Now, ETFs are in fact ticking higher, but they only trade within ETF hours, Monday to Friday. They're not an all the time thing. And there's dynamics there, but spot volume really just not anything to write home about. ETF volume is picking up. It's actually bigger than spot volume, shows you that ETFs are a very, very important part of this sequence. Down the bottom here in purple, we'll talk about this later on. Here's our revived supply. So long-term holder coins coming back to market on chain. So you can see here that they're, getting up to maybe 40 odd % of spot volume. So it's pretty meaningful. 1.8 billion versus 5 billion. It's non-trivial in terms of those coins coming back to market. And then here's another strange thing. And again, it took me a while to just wrap my own head around this. This is on-chain volume. And I went through a whole bunch of different data providers. I looked at different filtering, exchange only, entity adjusted, you name it. They all have the exact same pattern. We actually have an upswing in overall on-chain volume. So the on-chain volume side is actually not that bad. And yet we've got nearly empty mempools. Very, very strange. And my takeaway from this is we are really seeing this dynamic where there's not as many transactions, but they're massive. They're holding massive amounts of coin. And again, it doesn't matter whether we do entity adjusted, we get rid of exchange internals, all that stuff. It's all the same story. So really the takeaway here, obviously we looked at all the long side speculation. That's really the first major insight. Second major insight, spot volume is weak, futures volume is weak. I want to see them reverse. If they don't reverse, we may have, maybe I'm just completely wrong in my read here, but I want to see them reverse. If they don't, not great. ETFs, I'm not too concerned about. They seem to be just humming along. And that's actually a lot of the good news we'll talk about in a second. On-chain volume, not bearish, strictly. Still trending higher, but strange. There is certainly no retail, right? And again, a lot of people are hunting for retail. Retail comes at the end of the cycle. And we may not even get retail in the way we usually did, just because, Bitcoin's kind of a different animal, and maybe the ETFs are actually more representative of that now. All TBC, but certainly there is a shift going on in the way that the market is trading. You can see how much bigger on-chain volume is than spot and ETFs. Much, much bigger. It's the second highest relative to futures, albeit still much, much smaller.